Hi, I'm Jimmy. In this video, we're looking at a handful of stocks that I have in what I call my bullpen, and these are really the top stocks that I want to buy, especially if we get the market to continue to pull back. If the market were to have some real big correction, these are the list of stocks that I've ultimately already researched, already done videos on them, and I'd love to buy it. And I'll let you know my favorite one as we go along. But before we jump into that, I just want to let you know about a website that we are building, which will essentially look like this. And Apple, yes, this is one of the companies on the list. I'll go through the list in 1 second. But the goal of the website is that it will make it quick and easy to do our calculations of fair value. So we might look at a stock like Apple and see that the stock is, I currently have it a fair value of $143 per share. For that, we're using analyst estimates. We could see these analysts. There's 16 analysts that projected this number, 15 that projected this one. That's sort of how it works. Now, analyst estimates can be tricky to find. That's one of the reasons we want to put together this website. But if we look at a company like Apple, or perhaps a company like Home Depot, same type of thing. Company like Lowe's, we can look at that and come up with what we perceive to be the fair value. Of course, we could all set our own required rate of return once the website is up and running. We expect it to be up and running by the end of the second quarter of this year. So if you come over and sign up for the website, we're going to lock in the price forever. So you come over, sign up, the price will never go up on you. And then once the website's up, we're hoping it makes it super quick and easy for everybody to build their own bullpen of stocks that they really want to buy, like, for example, Lowe's, which again is a company on this list. But I'm looking for this stock. The current price is at $227. I want it to fall below that $218. Okay, for now, let me jump in and show you what stocks I think are most interesting to buy if they get to the right price. Okay, so here's the list of stocks that we have. So, these are the columns. So first up, we got the company name and ticker. That's easy enough. Fair value. This is actually the fair value date, the date that I last calculated the fair value. Some of them have changed a little bit, but as we saw with the ones that I just pulled up, Home Depot, Lowe's, they haven't changed all that much. Then we have the price that we want to get in for each stock, followed by the margin of safety. Now, everybody should really set their own margin of safety. The margins of safeties that I will show you on this list are the margin of safety that I use for each individual stock based on how confident I am in the company to achieve at least the cash flow projections that we're aiming for. So in theory, the higher confidence you have, the lower the margin of safety that you need. Although generally, I think it's good to always have some margin of safety. Then we have our ideal entry price, followed by the current price, which is fairly obvious. Ideally, we want to buy it below our current price. The ideal entry price is basically the fair value of the stock divided by adjusted for the margin of safety, and that gives us our ideal entry. Okay, so let's jump right in. Okay, now the first stock that I own is Disney. Disney is actually a stock that I personally own, and I bought it at about $99.86. Now, Disney's a company that I think is poised well for the future. Disney Plus is doing fairly well. Their parks business continues to get stronger coming out of everything that has happened and is sort of happening with the COVID virus. Their movie business continues to do well. But I actually just want to bring out, this is another point that I get a lot of pushback about, and I recognize that this is an issue. So the current price is $152. My ideal entry is at $116. Now, when I first bought my shares, the stock price was actually right around this level. This is right when COVID happened, and the stock was in the 150s, and I had a fair value of about 102 or 104 in that area. And a lot of the comments that I got were people saying, well, that you're never going to get it there. The stock, it's never going to get there. And I wasn't sure it actually was. But then COVID happened. The stock market took a nosedive for a few weeks, and I was able to buy it at $99.86. Now, I got a little impatient there. The stock actually fell all the way into the 80s, so we could have bought it better. But either way, some of these companies, I recognize we might need a major pullback. The point of a bucket list or a bullpen of stocks is exactly that, though. It's that we've done the research, and if the market does see a pullback, well, those are the companies that you jump into. And guess what? We know the price because we've done the research and we've done the calculations. That being said, this next company, Microsoft, is a company that I really, really want to own. But I want to buy it at a good price. I have my ideal entry at $215. Our fair value calculation came in at $226. I had a 5% margin of safety. That drops the ideal entry down to $215, puts the current price at the current price is at $302, so I needed to drop a decent amount. Now, over the past year, Microsoft stock is up about 30%. Year to date, though, it's down about 8%. So if we were to get a market crash, this is one of those companies that I would love to own. This is probably my favorite buy on the entire list. Their cloud business is booming. Their personal computing business is growing nicely. So this is a stock I'd love to buy. But personally, one of my rules is I don't want to overpay for the stock. That brings us to the next one that I already showed you guys, and that's Apple. Again, Apple, I have the fair value at 143. Small margin of safety, 5% is my smallest margin of safety. Some of them you'll see go up in a second. Means I want to buy the stock at 136. Now, Apple, I actually own a couple of shares, but it's because I have affiliate links to like Robinhood and stuff in the description of my videos. And if you click on that link, well, you get a share of a stock and I get a share of a stock. I've actually picked up 2 shares of Apple, one with Robinhood and one with Moomoo, which is another brokerage company. So I got lucky that usually they don't come back with those types of companies. It's like $3, $4, $5, $10 stocks. But I got a couple shares of Apple, so I was thrilled about that. But I want to buy it for real. I want it to be a real position in my overall portfolio. So I need to buy it. I need to get below 172. I need to get below 136 if I want to buy it. Okay, the next company on my list is CVS. Now, CVS is a company that I analyzed in the past, and I did a video where I actually compared CVS to the Walgreens Boots Alliance. WBA is their ticker. But ultimately, in my research, I thought that CVS was better positioned than Walgreens was, ultimately because back in 2018, CVS acquired Aetna. And I thought that that gave CVS much more dynamic growth potential, a revenue growth potential than something like Walgreens did. Now, you might notice here that I do have a much larger margin of safety. I have a 20% margin of safety. The fair value is at 116. The stock's already below that, but because I recognize there's some risk to this more than a company like Apple or Microsoft, which I think they have huge growth and they have such solid, loyal customers that I want a bigger margin of safety. So I want it to drop below 93, although we're not too far right now. So this could be a nice defensive addition to the portfolio as well. Another defensive stock is AutoZone. So AutoZone, a lot of people laugh that this is on this list, but AutoZone, the fair value of the stock I have at $1,789. I think that they should do a stock split just to knock down the stock price, make it more reasonable for people, but still, I'd still like to buy it. I want a reasonable margin of safety because they don't have the growth that some of the other companies have. Puts my ideal entry at $1,431. Stock's currently up at $1,900. But one of the reasons that this is on my list is that I have done analysis of different stock market crashes in the past. I've done a couple of videos on them in the past, where basically I go back to different stock market crashes and look, all right, during the crash, which stocks performed the best? AutoZone is consistently near the top. Impressively, it does quite well when there's a stock market crash. So I thought it made sense to add a company like this to the bullpen if I get the opportunity to buy it. If not, okay, it's not the worst thing in the world, but if I do get the opportunity, it would be a nice addition to add some support to the portfolio, to my personal investment portfolio, if the stock market does crash. Okay, next up, another company that we saw was both Home Depot and Lowe's. We could see I have a 10% margin of safety on this, on both of them. Neither one of them are quite at the prices that we're looking to buy them at. Now, if I had my choice, if both of them got there, I might buy both. I think they're both two solid companies. Home Depot does have slightly better margins, although I think that they're both in great businesses. And if they both got there, I might choose Home Depot over Lowe's just because of their margins. But if Lowe's got there and Home Depot didn't, I'd be happy to buy Lowe's. They're both solid companies that I'd love to own. The next one's another stock I actually own, and this one's highlighted green because it's actually the only one that is currently trading below my ideal entry. Now, I bought my shares in the $45 range, so that's the reason it is currently below the price, but I'm not buying any more shares. I don't want to average up. If it did fall below 45, perhaps I would, pick up a few more shares there and average down a little bit, but I'm actually fairly happy with my overall, I'm fairly happy with the current size of Intel's position in my overall portfolio. Now, I know that they are building some new plants, they're putting out some new chips, so I think that Intel has some decent upside potential over the next couple of years. Now, we might also notice that the fair value, we came in at $73 per share. I had a big margin of safety. This is my largest margin of safety out here because of the risks involved. They are in a highly competitive industry, although the industry in general is growing. I recognize that there is some risk, which is why you'd want to buy it at such a good discount to our calculation of fair value. Okay, the next company on the list is a financial company in Visa. Now, outside of a pullback in revenue back in 2020, Visa has had solid revenue growth, solid margins, and solid free cash flow growth. We can see the fair value comes in at $224 per share. I had a 10% margin of safety, a reasonable margin of safety, puts the ideal entry at $202. Right now, it is trading very close to our calculation of fair value. So it is a stock that I'd like to own, but I don't want to give up my margin of safety. So I'd like to see it drop below there. I don't currently have any financial stocks in my portfolio. So this is a stock I think would be a nice addition to the overall portfolio. Next up, we got Kroger. Now, this is another defensive holding. They're a supermarket chain, and it is a stock that I have a fair value at 37. The ideal at a 10% margin of safety, ideal entry price at 33, puts it about $12 overvalued right now. This is a stock I'd like to own if we think we need some defensive holdings in our portfolio. Now, I personally own a stock like Lockheed Martin, which is fairly defensive. If I could buy AutoZone, that's a defensive play that I would like to own there. Overall, Kroger is a good one, and if the price gets there, it is something that I will consider, but it depends where things are at that time from a macroeconomic perspective and if it's worth adding another defensive holding. That being said, if you're curious about signing up for the website so you can get access to our discounted cash flow calculator once it is up and running, I will leave a link over here and a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.